Hey, this is Yang Nguyen, and you're listening to the Immi Wealth Builder podcast, where we celebrate incredible immigrant success stories, share proven strategies, and give you actionable steps to build your wealth, freedom, and a lasting legacy. Let's go get it. So if you think investing in private equity is for the ultra rich, this episode is going to flip that mindset completely. So many investors jump into deals without understanding how the funds really work and really end up learning the lesson the very hard and expensive way. So today, Alice, who is a powerhouse and founder investors who's built, exited, and invested across multiple funds over the past 15 years, she's seen the good, the bad, the ugly in private equity, and she's here to break it all down for us. So Alice, take it away. Tell the audience about your journey, how you get into private equity, and then we'll take it from there.
Okay. Yeah. Thank you so much, Yen, for inviting me onto this show. I'm a big fan of you. And I'm happy to be here today. Yeah. So a little bit about me. So I was born and raised in Taiwan, and my, mom is a banker and my dad is an engineer. And they decided to move us to Canada when I was 13. So
wow.
We immigrated to Canada when I was 13 and completed my schooling in Canada and eventually went to law school. So I became a lawyer. I practiced mergers and acquisitions and securities law a long time ago. So this is probably 16 years ago now that we're talking about. Yeah. So I have always been very entrepreneurial, but because I have Asian parents, I was prescribed, one of the 5 pathways that's approved, You guys get that. So it's either you become a doctor or a dentist or a lawyer or, an accountant or an engineer. So because I'm very kind of logic driven and I'm very into like cause and effect and understanding how things work and reasoning and debating and negotiating, all of that good stuff. So I decided to go law school. So that's my path. And I figured, I know myself, like I knew as a young age, I was very entrepreneurial, but I didn't know what business meant, because I think sometimes when you grow up in a family that has those prescribed textbook paths, it restricts your imagination a little bit. So to me, business was banking or accounting or finance, but I didn't want to do any of that. So I just decided to, create my own path. So after 3 years of practicing law at a big law firm in these areas, I felt like I had enough of a base of understanding of business. And business is about managing risk, right? So creating opportunities and negotiating or creating partnerships and collaborating with people to do something that monetizes. That's essentially what the fundamentals of business is. So for me, after 3 years at a big law firm, I decided to venture out into creating my first business. And then that went well. I was a top 40 under 40 by Business Vancouver. Yeah, within 3 years of leaving law and founding my first business. And then that parlayed into the last 15, 16 years of me founding, co-founding, operating, exiting multiple businesses. And throughout this pathway, I remember having exited my first business about 12 years ago. I had amassed my own capital, right? So now I have a bit of capital to invest. And so I met my then mentor, James, who is now my business partner, the other general partner in our fund. And I said to him, teach me everything you can teach me about private equity, because I intend to do really well as an investor and eventually invest professionally in this realm. And so that's what happened. Just like everybody else, like the way to get involved in investing across different asset classes is by doing. Well, first by learning, but once you learn, you got to start by doing. It's a little bit like riding a bike. You can watch YouTube videos about riding a bike or read about it, but until you get yourself onto a bike and start riding a bike, you just don't know how to do it, right? Absolutely. So I think that visceral understanding of investing is very important. And then that itself is the tuition you pay to learn about something, right? Wow. So I think for the audience of this podcast, I think that probably the biggest gain that they can get is to understand that you have to get plugged in to deal flow. So what we call deal flow, right? And so by sometimes coming into a new country or a new situation, what's lacking is really the opportunity to get plugged in. So I would say if there's anyone that's doing something interesting that you would like to learn about, like definitely approach them, right? So you can watch a podcast, you can watch a YouTube, or if you meet them in person, like definitely just connect with them and say, hey, my intention is to learn about this asset class. How can I get into this asset class, right? What can you tell me or what can you teach me about that? So in the last 12 years, I invested my own capital, learned a ton from different asset managers, invested across different asset classes. Of course, I've done really well, but there's been a couple flops too. But you learn also from the failures, right? So don't be afraid to try and don't be afraid to acknowledge that in the investing realm, just like starting a business, you're not going to win every single time. No manager wins every single time, not even like Warren Buffett, not even the best hedge fund managers. Like you just don't know. So that's how I became involved in the fund industry and how I became a fund manager.
Wow. There's so many things that I want to touch on, Alice. So let's just take it back all the way to the beginning. You're practicing lawyer, and then you decide to leave and start your own business. Tell us a little bit more about, one, if you have built some sort of a safety net, or like how do you prep for that, leaving a W-2, right? Leaving a cushion W-2 to go into an entrepreneur path. Tell us about that prep. And also, too, what was that business?
Yeah. So again, it's difficult. I'm not going to lie. Like I was making six figures in my mid 20s as a lawyer, right? So by 25, 26, I was at McCarthy Tétrault, which is Canada's #1 law firm. It's harder to get in than Harvard. So I got in, got myself a seat at the table. At 25, 26, I had an assistant. I had a really beautiful office that has amazing view of the city. And so to leave that, it was difficult, but that coincided with me doing actually a lot of personal development. So I started doing a lot of personal development at that time. So even though I love the glamorous external wrapper of that job as a junior lawyer, it's very much like what you see on the TV show Suits, right? Yeah. So a bunch of like smart, polished, well-dressed young people going to law firm, and then they kind of duke it out at the law firm. It's very much like that. But underneath that glamorous wrapper, at some point, I think we all come to a point in our lives where we have to ask ourselves, is this really in alignment with my highest purpose, right? Does my soul feel a calling for something more, for something else? And so I had that calling, like around 26, 27, I knew that I was getting a lot of good experience from the law firm, but it was not my be all and all. Like I knew I wanted to be in business. But again, what does being in business mean, right? So what does that mean? I didn't have a mental picture. So then it was tough to leave the golden handcuffs. But I think for the audience here, if you have that feeling like there's something more and you're not quite 100% aligned with your soul's purpose, then you have to start taking action to go into the right direction. So it's no different than using a GPS to navigate to where you want to go. If you know that ultimately you're wanting to go to LA, but you find yourself driving to New York City, for example, then what's the first thing you need to do? You need to be honest with yourself, and you got to stop whatever you're doing and then reset the GPS and then start following the correct pathway that will take you to LA. It's the same thing in life or in business. So for me, I knew I was not on the right path. I did not aspire to become a senior law firm partner, and that's just not the kind of life that I resonated with. So then I went through a process of understanding. I took a couple months off, and I looked at this concept of ikigai. I don't know if you guys know, but you know the Japanese word ikigai is a Venn diagram, basically what you're really good at and what you're passionate about, and as well as what the market wants. Yeah. So in the middle of that Venn diagram, you have ikigai. And if you can uncover your ikigai, like the half of the battle has already been won, right? So for me, at the time, I knew I wanted to reconnect with my heritage, right? So I, studied sciences and philosophy, and then during undergrad, and then went on to law school. I went to law school in Calgary, which is like Texas of Canada. Not a lot of Asian people at that time. So I was fast losing my cultural heritage and my language. So I think by 26, 27, I had this longing, I had this calling that, okay, there's a voice inside of me that says, okay, Alice, you got to reconnect with your heritage and your language. So I was looking for a business that required me to travel because I love travel. At the time, I really enjoyed wine, I really enjoy wine tasting and appreciation. And then I wanted to do a business that requires me to travel to China and requires me to speak Mandarin. So at that time, my Mandarin was actually quite weak, like definitely not at business level because I left Taiwan when I was quite young. So I never practiced, I never really worked in Taiwan, or my level of Mandarin Chinese was elementary school level. So I knew I needed to very quickly like throw myself into the environment so that I can very quickly catch up, right? So that's what I did. And so my first business was I discovered that around 2010, there was huge demand coming out of Greater China region for foreign wines. So let's say that there's a lot of people from China in Vancouver that was looking to buy wine. And I'm not talking about a couple cases, like these family offices out of China, they were buying containers of expensive wine from Canada, from Australia, from US, from Europe, wherever they have a tie to, a nexus to. So then I realized there's a two-sided marketplace problem because the population in Canada is not huge. And so in British Columbia, the province I was in, there's limited people to consume the wine that's being produced. And yet there's 400 wineries, right? So there's a lot of surplus. So on the supply side, there's a surplus. And on the demand side, there's a demand. But in between them, there's a big gap because on the demand side, they don't know how to access the wine, right? They don't know how to access the wineries, the inventory, the new harvest, like they don't know how to speak for the allocation. So it's no different than what I'm doing now in investing. It's understanding, hey, there's this strategy that is very much worth paying attention to. And yet the investors don't have access to that strategy because not plugged into the deal flow. So back then, it's the same thing. I mean, now looking in hindsight, what I've been doing has been kind of the same thing all along, right? Just in different contexts. So back then, I realized there's this gap between the supply and demand. And then so I created an export agency to help Canadian wine producers export to China. At the same time, helping the Chinese wine buyers access the inventory from the Canadian wineries. So in the wine world, I would be a negotiant, but you know, in terms of looking at it from a business perspective, is what the technology sector calls a two-sided market problem. So that was revolutionary, believe it or not. So even though wineries existed in BC for decades, by the time I was working on it by 2010, no one was able to or had figured out that there's this business model, partially because maybe the wine industry is pretty isolated or insulated from the export markets. And so I was able to create this two-sided marketplace to be the bridge, right? And so
I love it.
Yeah, being a fund manager, it's the same thing. Two-sided marketplace. There's people with capital that they want to invest. They want to learn more about alternative investments, private equity funds, like what are the insider strategies that they can tap into, but they don't have the deal flow. And then in terms of the deal flow side, they want to access more investors or be able to have the opportunity to share what they're doing, but they don't have that, right? I'm kind of, in a sense, doing the same thing. So that was my very first business, how I won a top 40 under 40 in 2013.
Nice.
Hard to believe, more than 10 years now. Yeah, so that's kind of how I got started.
Let me recap a little bit because you mentioned so many good things. So the first piece I definitely want to mention is for the audience who's listening, right? If you're in a job that is paying you well, that maybe have the glamour that you were looking for at some point, but it doesn't feel like your soul is aligning to it, to what Alice said, right? If you're trying to head to LA, but you realize that you're actually heading to New York, one, recognize that. Two, it's okay to do a complete 180, right? Whatever experience, just like Alice, whatever experience she has acquired during her time being a lawyer, all that experience stays with you and it just get transferred, it get transformed, and it get developed. So don't ever feel like, man, I just wasted all this time, right? Because all of that knowledge, all of that experience stays with you. But it's okay to do a completely 180 and find something that is more aligned. So I love that. The second piece I definitely want to point to is it always start with you, right? It always start with what you want, what is your interest, and knowing that you can get paid for doing what you want and what you're interested in, right? So I love, Alice, that you share that you love traveling, you love wine, and you were trying to connect to your culture. And so I love that you find that first and then actually then figure out what will be something that you can do that would actually give you that access. So I love that as a second point. The third point that I really want to dig a little bit deep into is this figuring out the problems or the demand, right? So at that point, you figure out like, hey, there seems to be a problem here. There seems to be a demand that I can solve. So tell me about how do you actually find that out? How do you actually navigate or even come up with that theory, right? That like, hey, there's a lot of demand here for foreign wine. How do you even get to that? I think that's what a lot of our audience would really benefit from is how do you even find out there is something here?
Yeah, and I'll use the example of our current fund, but really the process each time in all my businesses has been the same. So it's from paying a lot of attention. It's coming from paying a lot of attention by digesting materials. So for example, for our fund, my business partner and I have spent the last 3 years studying different real estate strategies in the United States. And as a private equity firm, we are looking for a big problem to solve for a long time. So it's a problem that is substantial and is not going away anytime, right? And the reason we have to do that is because we're going to be injecting a lot of our bandwidth, our team infrastructure, our attention span, everything has opportunity cost. So we want to work on something that's not just like good for the next 6 months or good for the year, right? So we want to stick to something. So we looked at everything. We looked at value add multifamily in Texas. James spent the whole 2022 here studying that. And we looked at different things in 2024. And then what was serendipitous is that I was at a real estate conference more than a year ago. And I met a land developer and he was telling me about what they're doing. And at the time, I didn't know anything about land development. So it piqued my interest. So land development is actually land entitlement plus horizontal development. So land entitlement is going to your city hall, your county office, and you're doing everything that's required paperwork-wise, right? To get the right permit and right like paper stuff to make raw land into buildable lots, right? But once you have it ready on paper, you need to actually build roads and infrastructure for the piece of land. What they do is there's a business in land development where they're very much connected to the home builders in the country. So home builders are companies like D.R. Horton, Lennar, Pulte, Toll Brothers, these really large single-family home builders that build master communities. So 500 homes, 1,000 homes, 2,000 homes. So guess what? Before they can build vertical construction, vertical development, they need paths, right? So they need finished lots or buildable paths. And so that's what our operating partners, the land developers, they deliver that. So you might ask a D.R. Horton, which is a $35 billion annual revenue company, how come they don't have a land development division? They don't do it themselves. I mean, in some cases, some do, but for the most part, because these public companies, they kind of thrive or suffer the decrease in their stock price based on a bunch of financial metrics and financial ratios. When you're working on the land development, you got to own the land, but ownership of land actually shows up as a liability on their balance sheet. And so it's not favorable for the public companies to do that themselves. So they like to outsource land development to third parties. So that creates this massive demand for the land developers to turn raw land into finished lots for the national home builders, right? And the national home builders, they are working towards actually fulfilling a gap of 4.8 million single-family homes. So we're 4.8 million single-family homes short right now. And that is in part due to the pent-up demand from the financial crisis of 2010. So there's been a history of underbuilding since then. And so they're kind of like in this race to catch up, but it's hard to catch up because it's such a big gap now. Yeah. So D.R. Horton, which is $35 billion annual revenue, guess how many homes they can build a year?
I don't know.
Just take a guess.
500,000?
Yeah, so yeah, your answer is not that far, but they can build 100,000.
Really?
90,000.
That doesn't seem like a lot. For sure.
Yeah, I know. And then they're America's #1 home builder, right?
Yeah.
So second place, Lennar, they're building around 70. Third place falls down to 50. And then 25. So literally, it takes the top 50 to be building at their maximum capacity about 10 years to catch up on the current gap. And the gap is still growing. So household formations is not just people having babies and getting new families together and buying new homes. It's also people downsizing, people splitting up, needing multiple households. So that number is just growing. So we established that that's a very big problem. And so we want to understand, well, as a private equity firm, how do we add value, right? Because we know these land development projects are actually very profitable.
Yeah.
And it's very safe because the national home builders actually tell them, hey, land developer company, we want to build this community of 1,000 homes. It's already entitled, like we have the land. And can you buy the land from us, this entitled piece of land, at $30,000 per lot? But once you're done building the roads and building infrastructure, we're going to buy it back from you at $70,000 a lot. So you know the profit at the outset, and that's paper, that's contracted on day one. So on day one, you have a contract that you know that after you execute on the horizontal development, they're going to buy it back from you, right? The exit is actually built in.
Yeah.
So that's a very rare instance in business where you have that opportunity to work on a business that has the exit built in. I haven't seen any other business model like that. So we love that as a thesis for our investors because the risk is very much mitigated.
Yeah. That's really interesting. So I love we use the word thesis, right? A lot of these potential problems that you think is out there in the world come from having conversation with people, going to conferences, reading the news, right? These will kind of give you like, oh, wait, I think there might be something here that I can add value to, that I can solve. So I love that you mentioned that. Tell a little bit more about how do you even test that? Like there is a theory there, right? That like, hey, we could potentially do this. This could be a case. How do you even test that idea of like, hey, whether this would actually work out or not?
I guess when you're starting a new business or new fund, generally speaking, you just speak to a lot of people, right? So you have to do market testing. And we talked to a lot of people before we landed on this thesis. And we also know that the land developers that we work with, they already fundraise for their projects. It's just that no one has actually packaged it into a private equity fund format to make that more accessible to investors.
Yeah.
So we know that we're not inventing something like high tech, like it's a concept that's been around. So it's not a very well exposed or understood concept, mostly because the people in that circle, they want to keep it pretty hush hush.
Yeah.
Right. So when you have like amazing investment thesis, like you want to maybe just keep it for yourself, right? Like unless there's some reason, economic benefit for you to be sharing that, you're not going to tell everyone about it. So that's that. So to test it, it's a multi-pronged process. Like you look at whether the problem already exists, but exists in a format that's not optimized. So if the format is not optimized, that means there's some gaps in the system where you can add value, right? So there's something in the value chain where there's a breakage or a gap. So can you add value, right? So in our case, we looked at the situation and we said, yes, the land developers can use our capital because they want to scale, right? A lot of them want to scale to very big companies. And so they need to have a capital partners because they're excellent operators in the business of operating in land development. They're not people that capital raise or just focus on due diligence and allocating capital. Those are totally different businesses. So we just try to do our best and be the best that we can be in what we do best. And that way we can add value to the value chain.
I love it. Awesome. So now that you can bring this to the mass, tell us a little bit more about which type of investors it would be a good fit for, and tell us more about that. Yeah.
Sure. Yeah. So we launched our fund earlier this year, and it's a $15 million fund. And we are still looking for partners, limited partners, to come in and join us. And we only work with accredited investors. Basically, it's 1 million net worth, excluding primary residence or household income of 300,000 and individual income of 200,000 a year to get that accredited investor letter. So most of the private equity funds will require people to have that. And you can get that from some third-party like software companies. Like we have one connected to our investor portal called Parallel Market. So just type in parallelmarkets.com. And I think you can go through a self-accreditation process and certify that you're an accredited investors. But in terms of what type of demographics, I mean, we love working with anyone that wants to get involved in private equity. The typical investor is someone that is in the growth mode. So they want to have a way of growing their capital outside of working from their W-2 or working at their business. So they want to start to accumulate capital outside of their active business or active job. So our fund is a 3-year fund. And because we deploy the capital into these land development projects, it takes about 2 or 3 years to finish the 500 lots, the 1,000 lots. And then we have the national home builders buy back the lots, right? So we sell it to them at the end. And that's when we have exit. We're looking at a targeted 25 to 27% IRR, which is the return on your money. And so in 3 years' time, we talk about this concept of equity multiple. So we're looking 1.75 to 1.81 equity multiple, meaning if you invest 100,000 with us today, in 3 years' time, you can expect to receive 175,000 or 181,000 back from your investment.
Awesome. I love hearing that. I love hearing about these passive investments because I know when I talk to a lot of people that have a busy W-2 that really want to grow their wealth and they're like, well, but I don't have the time, right? These passive investing opportunity, just like what Alice is sharing now, is a way that people can build their wealth while absolutely still focus on their W-2, focus on their time with their family, because that's what we're all building wealth for, right? So talk to us a little bit for maybe beginning passive investor or maybe even experienced passive investors. What are some of the red flags that maybe they should look into when they evaluate the operators? And maybe some of the due diligence thing that they should be doing before they commit to an opportunity?
Yeah, so I'm LP in other people's funds too. So even though I'm a GP in my own fund, I'm very much on the other side of the table all the time. And in the past 12 years, I've been pretty actively investing my capital. So I think look at the sponsor's track record. So have they done this before? And it's okay if they maybe haven't done it, but then what do they have to back it up? Maybe they have other industry experiences or there's some tie into what they're doing now that gives them an unfair advantage. So I think really do due diligence on the operator. So sometimes you can just Google, right? We don't do enough basic due diligence, just like Googling people or checking out their LinkedIn. And a lot of times you'll find a lot of information. And I think beyond that, for me, I look at how they have been investors themselves. So if there's a fund manager that's not done well in their own personal investing, then I don't trust that they can be a great investment manager for other people, right? Because it's the same skill that's kind of carrying them from their personal life into the professional life, right? So I think look at whether they've done well for themselves using their investment methodology. And I think that tells you a lot. And I think talking to a lot of people, understanding what type of circles that they run in, right? So where did you meet them? Do they come from a trusted source or have they come to you through a very credible conference? So I think look for a lot of those type of confirmations or affirmations. And beyond the operator or sponsor, you also want to look at the projects themselves. So you'll also want to understand a little bit more about what you're investing in, right? So in terms of understanding the thesis, okay, does the thesis make sense? Or is everyone doing that? So I think you have to look at what makes sense in that time frame as well. There's a lot of information on my personal website, which is connected to my YouTube. So for the audience here, you can go to AliceChenCompanies.com and there's a lot of information, educational content that I have on there. So feel free to take a look. I've taught many master classes on private equity fund formation, due diligence process, all of that. So you can do that. I think at the same time, if you use GPT, you can type in, okay, I'm looking at this deal. What are the due diligence points I should be looking at? It actually gives you a pretty detailed list on exactly what you need to check off. So use that as a checklist and just go one by one.
I love that you mentioned that. I fully agree. I think the very first thing that people do when they consider passive investing is just always looking at the operators and the sponsor, right? Even though you're thinking about deal strategy, you invest in people first. So the operator and sponsors are the key to whether the project will work, right? What was their track record? How did they navigate difficult time in the past? Because if anyone's been in the investing long enough, they're going to hit some roadblocks. So always ask about what was their track record looks like, what they did when things didn't go right. Those are always great questions to ask, but always sponsor and operator first. And then I love what you said about the second piece, then looking at the strategy, Does the strategy make sense? Does the project make sense? Will that make sense to your passive investing goals,
Yes.
right? Just like what Alice said before, that for her fund, the good fit is someone who looking for a strong growth opportunity. If you're looking for cash flow right now, that may not be a good fit for you. However, knowing there are other passive investing opportunity out there that can give you the cash flow right now, if that's what you're looking for, which is the beauty of passive investing, right? Instead of having to learn all these things yourself, you can split your money into these different passive projects. Some will give you strong growth, some will give you really strong tax benefits, some will give you strong cash flow. So diversify is the name of the game, right? Which is what we're passionate about, giving people opportunity to grow their wealth completely passively. Education is an important piece, right? So you definitely want to make sure you feel confident about what you're investing in by spending some time doing due diligence, ask ChatGPT, go learn all this education that you can learn, right? So I want to switch to the mystery question piece of our podcast episode. This is a questions that our previous guests have left behind for future guests. And your question is, what does work-life balance mean for you?
Oh, yeah, that's a great question. And I love that question because I have work-life balance. I believe that the decisions you make for your life, your business, or investing comes from a good state of mind. So if your state of mind is not good, you're not going to make the optimized investing decision. So I strive to have great work-life balance. And I would say I'm lucky in that I started my first business when I was quite young. So I was able to kind of get through the hard grind early on. But I've had at least a decade of pretty good work-life balance. So for me, I am really big on fitness and wellness. So I practice yoga. So I'm a yogi. I love travel, I mentioned earlier. So I make sure that I fill my cup by planning trips that excite me, right? So I think being exposed to different markets and understanding how people think and understanding how people live in different parts of the world gives me a very global understanding of the economic situation. So I really love traveling. I do a lot of yoga. I work out with a trainer twice a week. I go for a walk with my dog. I try to eat healthy. Like, I make most of my meals. I know what I like and I can do it quickly. And I just try to live a healthy life. I go to the spa, get a massage, like take a bath.
Big fan of that.
Yeah. And every day I try to do a meditation at the end of the day. So when I wrap up the work, like before I shift into evening mode, I try to kind of reset my brain's frequency at the end of the day. And I think that's really helpful because then my brain kind of gets tuned into frequency for expansion and for new ideas. I try to wake up and first thing I try to do is just be grateful. I try to give gratitude to 3 things. It could be super simple things. It could be like, I love hearing the sounds of birds chirping when I wake up. I'm grateful for a cozy bed. I'm grateful for a really lovely family. And I think doing those little things gives you a lot of the work-life balance. And then the rest of it is you got to execute and give yourself me time. Right now, I don't have any children, so maybe I have a little bit more free time than other people, but I have other pursuits, right? So, but it's all about how you allocate your time. So I think another thing about looking at the investment manager, I think that the best investment managers have that balance with their time. They're great time allocators or energy allocators. They know how to keep everything in a good state, in a good balance. So if you're checking out a manager, do they actually have a pretty balanced life? Because then they can make decisions from a very balanced place.
Yeah, I think that is so crucial. I'm definitely learning more and more as I continue to grow businesses is life never stops. Challenge will never stop coming up. So from the outside looking in, right, you may think that like things are just going so well and things are going so smoothly. I think as operators grow, the things that grow with them is just their mindset and their ability to reframe whatever is coming up. Because things can come up and to someone that might be like turning completely sideways, but experienced operator can just let things come up and just look at it as facts. What are facts? What are truth? And what are just like emotion feelings coming up? And be able to clearly, like you said, Alice, just clearly, calmly work through things. And that comes a lot from having this work-life balance. So I love that you share that. With that, please let the audience know how they can continue to follow your journey or get in touch with you and learn more about what you do and about your fund.
Okay, yeah. So please check out my website. Again, AliceChenCompanies.com. Our company website is phcfunds.com. That's Pender Hastings Capital. So check it out. You can find me on LinkedIn, Alice Y. Chen. And yeah, I look forward to hearing from you. And I wish you an amazing experience investing your own capital and gaining experience in private equity.
Awesome. I will link all that in the show notes. Thank you so much for being here, Alice. And thank you so much for listening, everyone. I'll see you in the next episode. Bye.
Thank you. Bye.